Are we on?
Yeah. And I'll cut out this part, obviously.
Okay. Okay, so you're not live on like Facebook or anything like that?
No.
Okay, so you're going to do a video, then you're going to edit?
Yeah.
Okay.
So, my name is Matina Rose with Remax, and today I am interviewing Ricardo Mendiola
Yes.
from MSI Credit Solutions.
Thank you very much.
You're welcome.
Thank you.
You want to
Thank
talk
you for
about
having
your
me.
company for a little bit?
Yeah. So basically, MSI Credit Solutions is a credit restoration company, and we've been in business for 12 years. A little story about me and my company basically is that in 2005, I actually wanted to buy a house myself, and I couldn't because of my credit score. So anyways, long story short, I ended up hiring a credit repair company. They did a great job. I went to go work for them for one year. After 1 year of working with them, I had the opportunity to open up my own, and now I've had MSI Credit Solutions for 12 years.
Very good.
Yes.
Okay, so how about we start with why is credit so important and what affects your score?
Okay, so it's an opinion, right? So why credit is so important and all that, but my opinion of why credit is so important is, as you know, they say that the three main things that you're always going to finance for the most part are going to be your mortgage, your house, right? It's your vehicle, and then they say student loans. Those are the three biggest things, right? So if you don't finance any of those three things, congratulations, you paid it cash. Good job. We all strive to be there. But anyways, for the most part, you are going to have to finance something at one point in time, okay? So if you do, what dictates the interest rate that you're going to get is going to be your credit score. So I would say that's why credit is so important, because everybody's always trying to get ahead in your financial, life. Right. And one of the things that could either help or hurt you in your area, in the area of finances, is going to be your credit score, which dictates your interest rate, which dictates how much you give out to borrow money.
And they even check it for rentals now and some jobs.
Yes.
So it's getting more and more important.
Exactly. And then the second part to your question, you were saying what affects it, right? Mm-hmm. So there's several things that affect your credit score. I know we're going to cover this here in a little bit, but I mean, it's how you pay your bills, okay? So if you pay your bills on time, that really helps it. If you don't pay them on time, it really hurts it. Yes.
Right.
So then the next area is debt. If you have a lot of debt, that hurts your credit score. If you pay down your debt, that helps out your credit score.
What's the rate? I've heard so many different numbers. Like how much, let's say you have $10,000 worth of credit available to you. How much of that should you keep a balance on about?
Okay. So, and that's a great question. So number one, nobody really knows how the bureaus calculate your credit scores, right? They don't know that, because that's how the bureaus make their money. They created a formula of how to calculate a consumer's credit score, right? And all these lenders love their formula. They love that formula. So in other words, the lowest that your score could be at is 300. The highest it could be at is 850. Everybody knows that the higher that you are, the better. Right. The less riskier you are to do business with, the higher that you are, okay? So, of course, the bureaus are not going to give their main bread and butter of how, they're operating their business, or else everybody would go open up, another image of the bureaus, right? But they say that the best formula they think is a mirror image of how the bureaus actually calculate your credit scores is 35% comes from payment history, 30% comes from debt, 15% comes from the age of your credit, 10% comes from inquiries, and the last 10% comes from the types of credit. So to answer your question, what should you pay your credit card down to, right? Is what you were asking me. That falls in the area of debt, okay? 30% of your score comes from how much debt you carry on your credit report. So when you think about that and you really ask yourself that, if 30% of my credit score comes from how much debt I carry on my credit report, the lower that you have in debt, the higher that your score becomes. So the answer, what I live by, what we always preach our clients to live by as well, is zero. Get your credit cards down to zero. Yeah, get your credit cards down to zero, because now you have zero debt. So you're not going to be affected by the area of debt.
Okay, so how does credit repair actually work?
Okay, so the way that credit repair works is this, and I can only speak for our company, I can't speak for anybody else, but it should work this way, is when anybody has, if you feel like your scores are not where you need them to be at, what you could do is you could reach out to a credit expert, kind of like us, and what we'll do is we'll look at your credit report, okay, and we'll do a free consultation. So we will not charge you for your consultation. And what we'll do is we'll look at your credit report to see if you have any derogatory items that are affecting your credit scores, okay? And let me give you an example of some derogatory items that we look for, because if you do have any of these derogatory items, then you could definitely benefit from a credit repair program, okay? So we look for late payments, 30, 60, 90, 120-day late payments. It doesn't matter if the late payments are on a car that you already paid off, years ago. It doesn't matter if it's on a loan that you already paid off. It doesn't matter if it's on a credit card that's already closed. If you paid it late, those late payments are on your credit report, okay? So then we also look for collections, and that's paid or unpaid. A lot of people out there, take matters into their own hands whenever they decide that they want to fix their credit, and they start paying off all their collections. Well, whenever you pay off all your collections, the only thing that the bureaus are going to do is they're going to update the balance. Where it said $500 medical collection, now it's going to say $0 medical collection, but it still affects your scores. Wow. Okay, so 30, 60, 90, 120 day payments, unpaid collections, paid collections, repos and foreclosures, whether they're paid or not paid. Okay, so repo paid, repo unpaid, foreclosure paid, foreclosure unpaid. We look for all those as well.
What about evictions?
Eviction would fall under collection.
Okay.
So if you have an eviction, right, it's considered an outstanding collection. If you went off and paid that eviction already, you have a paid eviction on your credit report, that's still affecting your credit score.
Right.
Okay? And so then lastly, we look under your public record section on your credit report, which is going to be your judgments, tax liens, and bankruptcies. And the same rule applies. If you had a judgment and you paid it off, you have a release judgment on your credit report, you could still utilize credit repair services. If you have a Chapter 7 bankruptcy that you discharged 4 years ago, guess what? It's still on your credit report, and it still affects your credit scores. And then same thing with, like I was saying, the judgment and tax liens. If whether they're paid or not paid, they're on your credit report. Yep.
Talk about the thing where you compare it to a speeding ticket.
Okay.
On how you get this done.
Okay, so great question. So once we identify that you have negative items, these negative items, and it doesn't matter if you have one. If you have one negative item, it's affecting your credit score, okay? And the reason why is this. 35% of our credit score, remember, comes from payment history, okay?
Right.
So if you pay your bills on time, it helps you out at a rate of 35%. That's a lot. If you don't pay your bills on time and you get any of the items that I just read out to you, right? Lates, collections, paid collections or not, whatever, judgments, tax liens, repos, foreclosures, guess what? It affects you at a rate of 35%. So once you identify that you do have any of those negative items that I just called out, right? Then now you know that you could definitely benefit from a program like ours. So if you got enrolled in a program like ours, what we're going to do is we're going to audit those negative items for you. Okay, and what we do is basically the same thing. An analogy is a speeding ticket. Okay, with a speeding ticket, if you get a speeding ticket, you have the right to plead not guilty. And when you plead not guilty, you put the burden of proof on the police officer, basically. And we all know this rule. What happens if you plead not guilty and then you actually appear to court, okay, and the officer does not appear to court? What happens to the ticket? Yes, you win. The ticket gets dismissed. Yeah. It was your word against nobody's. Well, it's kind of the same concept with your credit report. Those items, that might be yours, okay? We're not disputing whether they're yours or not. Right. We're disputing how they're reporting on your credit report, okay? And our deletion percentage at MSI Credit Solutions is about 50 to 80%. So let's say that we find 10 negative items on your credit report. Once you call us and you get a free consultation from us, and we tell you that you have 10 negative items, and we show you, look, these are the 10 negative items that we found, okay? If you get enrolled in our program, more than likely when you finish our program, you're only going to have 2, 3, 4, at most 5 negative of those 10 original negative items on your credit report.
Which is still better.
If you go from 10 to 5 or to 4 or to 3 or to 2 negative items and you continue paying all your active open bills on time, your credit scores are totally going to transform, and it's going to help your financial, future, whether, with anything, with not being able to buy a house to be able to buy a house, getting a better interest rate with your credit cards, getting a better interest rate with your student loans, getting a better interest rate on your vehicle, whatever it is that you finance, you'll get a better interest rate.
That's what it takes to move your credit score upwards.
Okay. So if you can enroll in a credit restoration program, what happens is once someone's enrolled in the credit restoration program, what we do is those items that you give us permission to dispute, okay?
Oh, okay.
Those items, like let's say you say, I want you to dispute, all the 10 negative items that I have on my credit report. what we'll do is we'll write letters to the bureaus, creditors, and collection agencies, auditing them to make sure that they're reporting that item 100% accurate according to federal law on your credit report. Okay, so they have a maximum of 45 days to respond back. Typically, every time that they respond back, things get deleted. Okay,
Oh, wow.
Anytime something gets deleted, guess what? It helps you at a rate of 35%. Because really think about this. If you had one negative item on your credit report, it's hurting you at a rate of 35%.
Right.
If you get that negative item removed, it's now gone. That 35%, you regain that.
Wow.
Okay? So yes, so back to answer your question. The bureaus have 45 days to respond back to not just us, to any consumer that might do this on their own, or if you hire ABC, credit restoration services, when you write a letter to the bureaus, creditors, and collection agencies, they have 45 days to respond back. So within those 45 days, they respond back. If any deletions occurred, which they usually always do within that 45 days, your scores just went up. So
Wow.
your scores have the capability of going up every 45-day window.
Nice. Is there anything I can do to prevent my credit score lowering from here on out?
Yes. So let's say you don't have any negative items on your credit report. Let's say
you fixed them all.
Yes. Or let's say I fixed them all. Or let's say some of you viewers, you're listening to this and you know for a fact you don't have any negative items on your credit report. But even if you think you have no negative items, go pull a credit report and make sure, because there's so many people that tell me that they don't have any negative items, and we look at their credit report and they do, because they didn't know that late payment on their paid off car is still on there. They didn't know that they didn't know that paid collection that they paid off 3 years ago was still on their credit report.
I better check
They didn't
mine.
know that paid judgment that they paid off 4 years ago was still on their credit report. So a lot of people don't know.
Yeah.
So anyways, but if you have identified that you have nothing negative on your credit report, okay, what can you do to maximize your scores? Okay, so it's back to the formula that I told you guys earlier, which is, since 35% of your score comes from payment history, just keep paying your bills on time. And I'm going to keep going. So all your active open bills, pay them on time. Pay them on time. Your gas, your water, your electric, your cell phone, your cable, your car insurance, your mortgage, your rent, anything that you have that's open, pay it on time. Number 2, try not to incur new debt. Any debt that you have on your credit report affects your credit score. Okay, but definitely, okay, if you're at step 2 and you have debt on your credit report right now as we speak, so you have car debt, you have credit card debt, you have mortgage debt, you have student loan debt, you have whatever, you have bank debt, you took a personal loan, and you're thinking, oh, okay, I'm going to take that advice, I'm going to start paying off my debt. Where do I start? Start off with your credit cards.